Hello guys, today's video we try to see what's the difference between a small correction and big correction. Now, in this year 2018 we have what we call a big correction. Now a big correction, when you see it on the chart, it is big. It means it is sudden. No one knows what will happen, and then you see the whole market collapse in a few days. And when it collapses, I don't use percentage, because some people begin to talk about 10%, 20% of the market. I don't use that. Okay, I don't use percentage, because whenever a big correction happens, it will be different. Okay, so there is no percentage. So the most important thing that you should notice is that it is too big. It means going down. Correction, it comes after a big bull, like what we have seen in the market for 1.5 years, 2017 and 2016. It was a bull market. It means 1.5 years and almost all the stocks are going up. So if someone tells me that in 2017 and end of 2016 you don't make money, it means you are screwed. It means you don't know nothing about day trading, about swing trading, or about investing, because the whole market is going up. Okay, now, so the big correction comes after a very bull market where everything is going up, most of the stocks. Okay, I'm not saying all, because this, as we have seen for the Dow Jones, General Electric was the exception for all this stuff. So anyone who was in last year, for example, in General Electric, he will have lost a lot of money if he is an investor. Okay, now, what are these small corrections? Small corrections happens every month. Okay, so I will show you right now just a diagram how this big correction happens and what are these small corrections in the future. Okay, so let's go to the explanation. Okay, so the market has been doing good like this for so long. This is 2016 to 2018 until the end here. What we say, end of January. It means the end of January. Okay, now let's take this not to be mistaken, and then you see that suddenly the market collapses. Okay, it collapsed like this. So this is a big, as you can see, it is big correction. And this, although it happens so often, but it doesn't happen each year. Okay, it happens after a few years, 2 years, 5 years, 6 years, or 10 years. It happened like this. It's sudden. It shakes the market, and the people lose too much money from this. Okay, now when it stops like this is the resistance line. For those, I always say it, this is what we call the support line, as you know it. I always speak about it. Now here, what you see are other corrections. Okay, as you can see in the market, other corrections going down and up. Okay, So like this. Oh no, I will take it this thing just to show you. Now these here, what you can see always, this here and this here are corrections, but they are small compared to this one. Okay, this one is big, these are small. Now let's say the market in the future, let's say we say 2019, let's say the stock market is good. Okay, is good. Let's say it goes above the resistance line. It will have always a small correction like this. So this is what I mean by small corrections. It means all these corrections that you see are what we call normal corrections, and they are, most of the time they are small, few days. But this one, compared to this one, which is called a big correction. Correction, it means that just there is a big sell off, a big sell off. So you ask yourself, why we have this sell off? Okay, just take the example that I always say when you are asking for why is this, and why we have a sell off, a big sell off, which is the correction here, and why we have it here. Now the difference is here most of the time we have short sellers, but there is no a big sell off. It means if it is, for example, mutual funds, they will not sell here. Here it could be mutual funds with Wall Street guys. Here it could be mutual funds, because those are the guys who can move the market and crush the market. Mutual funds when they sell at the same time. And plus, what I see in the other video is Wall Street guys. Wall Street guys, they come each day. They don't hold. They come each day and they hit the market until it goes down, and then they will buy here and the market will go up. So whenever they do is making money. And then now for this, okay, for this small, we can find people, just investors. I'm not saying investors, but most of the time people who are scared. Okay, people who are scared of the market. Each few days they will sell, making some money, and then they sell, the other sell, and then they see the market is going up again, they buy, they stay many days, and then they sell. It means they are following the trend by selling each time. Okay, following the trend if it is an uptrend. Okay, now this is as you can see, the difference between a sell off, which is a big correction, and a small sell off. It means it's just a small, because we have only few investors, or a few swing traders, or position traders who just buy for, they don't wait too long, and they are not truly investors. They don't stay many years, but they stay a few weeks, 1 week or 2 or 3, and they sell, then they buy, then they sell, and they just follow the trend. So this is just to give you an idea that corrections are always in the market, but sometimes you don't see them, because sometimes even in this one, which is a bull market, there are small here, small, each time we have small like this, going down, small, each time. Okay, small corrections. So you should always compare what's going into the market and just get an idea about this kind of correction. But all of these are natural. These big corrections happens after a long years of bull market. it happens always, and it has happened, and it will happen in the future. So it's something normal. You can never know really who are the guys who do this, but it is in their interest that the market go down. So Wall Street guy, they short, sell short. Day traders all over the world, they come to sell short, but they need help with mutual funds. It means mutual funds are selling, and the other guys are seeing that the stocks are going down too much, so they help and they sell short. So selling short is a basic thing in corrections, either small or big. Okay? So you ask yourself, what is this information will relate or will help us? Now, when I explain to you these things, this is technical analysis explanation. It means we are not going to see who in general, because you will never know. Okay? You will never know who is or who are these guys, because it's too many people in the market and it is secret. For example, you go and you buy a stock or you sell short a stock. Who knows about you? No one knows. Okay? You do whatever you want in the market. And let's say the investors have lost a lot of money. It's just as a part of the game. Now, for example, even the big guys like Warren Buffett, who is going long, it means he's not going to short. He doesn't short. But understand that he himself, he saw his stocks collapse, but he can do nothing. Okay, maybe he will hedge by buying options or whatever, but still he will lose a lot of money, but he stays in the money because he owns companies. These companies still exist and still continue. It's just the market where we have the game. So if you are in the game of trading, buying or selling short or whatever, you are there and you should see your own interest. You have understood right now, I think from my old videos explaining the technical analysis explanation, by my point of view, you have got an idea how things work in the stock market. You can never stop anything in the stock market. If the market crashes right now and we go to a bear market, you can't stop it, and no one can stop it, because all the people, they go to the other side, and investors begin to sell. Maybe they go to bonds, or they go to elsewhere, or they go to buy something else. Okay? Or they even they can leave their money in the broker account, and they can get 1% or 2% or 1.5%, and they stay like that until the market changes. So you should find a solution to yourself in what you are doing in the market. Okay? You should always take the direction of the market. You should never be against the market, because the market crushes anyone who is against. Those stubborn people, they don't understand the whole picture. And I think now that you get the whole picture and you understand this big corrections and small correction, please, if you have questions, please comment. Now, if you have time, I always do on Friday at 10 p.m. Always I have my live 10 p.m. Eastern time on Friday. So guys, wherever you are in the world, if you have time, just come and we can discuss and we can share information, because this is the aim of the channel, is to share information and just to get an idea about what's happening in the market. And your views are very important to me. Maybe you have better explanation than I do, and it's all, we have views, we have opinions about the market, and each one has his own idea. And that is the good thing about YouTube, is to share information and for free, and to enjoy sharing and and getting other people's ideas. Okay, so thank you very much and see you tomorrow video.